You've thought about investing in commercial real estate. Have you thought about multi-tenant retail centers? Stay with me and let me tell you more. Hello and welcome to my channel, Ray CRE Broker, and I'm Ray Kang, CCIM. I'm a commercial real estate investment sales agent with a national firm, and I sell Texas retail properties. Today we're going to talk about multi-tenant retail centers, specifically strip malls and shopping centers. These types of properties are popular among investors due to their potential for high returns and relatively low risk. In this video, we'll discuss what multi-tenant retail centers are, why they're a good investment, and how to evaluate these properties to make more informed decisions. So let's get started. Multi-tenant retail centers, also known as strip malls or shopping centers, are commercial real estate properties that house multiple tenants in a single location. These properties can range in size from a few thousand square feet to several 100,000 square feet, with tenants ranging from small mom and pop shops to large anchor tenants like grocery stores or department stores. Multi-tenant retail centers can be found in both urban and suburban areas and can be owned by private investors, investment groups, or institutional investors. The main advantage of multi-tenant retail centers is their ability to generate multiple streams of income due to having various tenants. This diversification of income helps to mitigate risk and provides a steady cash flow for investors. For example, if you have one tenant in one building and they fail to perform, then you're cut off from cash flow. But if you have 5 tenants in one building and one of them failed to perform, you still have 4 sources of income. Additionally, multi-tenant retail centers benefit from economies of scale, as the shared maintenance and other operational expenses can be spread across multiple tenants. Now, I'm not saying multi-tenant retail is the safest and best form of commercial property investment, because just like any other investment, it comes with its own set of risks. We'll cover that a little bit later in the video. Now, despite the risks, multi-tenant retail centers are a popular investment choice due to their potential for high returns. The steady cash flow generated from multi-tenants can provide a relatively stable source of income for investors, while the potential for value-add strategies and appreciation in the property can result in significant gains over time. In addition, multi-tenant retail centers provide an opportunity for investors to leverage their investment with financing, which can increase their return on investment. As mentioned, another advantage of investing in multi-tenant retail is the ability to add value to the property. Investors can renovate the property, improve tenant mix, and implement marketing strategies to attract more customers and increase rent. These value-add strategies can result in increased cash flow and a higher property value, which can be highly beneficial when it comes time to sell and move the equity elsewhere. When evaluating shopping centers, there are several factors that you as an investor should consider. These include location, tenant mix, lease terms, and property condition, among other things. Location is a critical factor in the success of a multi-tenant retail center. Look for properties that are located in areas with high traffic volume, good demographics, and strong market demand. You should also consider the surrounding competition and the potential for new developments in the area. Tenant mix is another important factor. Look for properties with a diverse tenant mix, including anchor tenants and complementary businesses. Additionally, investors should evaluate the creditworthiness of the tenants and the length and terms of their leases. Lease terms are critical. Review the lease agreements to understand the terms and conditions, including rent escalations, renewal options, and any tenant improvement obligations. Finally, you should evaluate the condition of the property. This includes the physical condition of the building, the maintenance history, and the potential capital expenditures that may be required in the future. While multi-tenant retail centers can provide significant returns, investing in these properties does come with risks. One major risk is the potential for vacancy among tenants. If one or more tenants leave, the income generated from the property will decrease, potentially causing financial strain on the investor, and also can raise concerns with your loan commitments. Also, retail centers can be vulnerable to changes in market conditions, such as a downturn in the economy, increased competition from online retailers, and even pandemics. Another risk to consider is the potential for unexpected capital expenditures. Investors should be prepared to cover the cost of any major repairs or renovations that may be required to maintain the property. Finally, investing in retail centers requires a significant amount of due diligence and research. You should carefully evaluate the property and market conditions before making an investment decision. Always get help from verified professional advisors. Thanks for watching this video on multi-tenant retail centers. I hope you found this information helpful in your real estate investing journey. If you got some value, please give it a thumbs up and subscribe to the channel for more real estate investing intel and insights. If you have any questions, please put them in the comments below and I will get back to you. To sum up, multi-tenant retail centers are a popular investment choice for CRE investors due to their potential for high returns and relatively low risk. These properties can provide a steady cash flow and an opportunity for appreciation in property value, while also allowing investors to diversify their portfolio. However, investing in multi-tenant retail centers does come with some risks that you should be aware of. I encourage you to get help from industry professionals, and carefully evaluating the property and market conditions, investors can make more informed decisions and maximize returns.